Hello guys, how are you? So today I'm gonna tell you about value-added tax and retailing. So one of our student sent me a message to explain the value-added tax and retailing. So as I uploaded the last video about the UK taxation system, so right now I'm giving some few more examples on that. Like value-added tax is a consumption tax, as you know about it, levied on the value added to goods and services at each stage of the production and distribution chain. So retailer plays a crucial role in the VAT system by collecting VAT on behalf of the government. So they are collecting the VAT on behalf of the government and remitting it to the tax authorities. So here we have an example how it works. Okay, so for example, let's consider a retail store that sells clothing item. Okay, the clothing item, the government imposes a 10% VAT rate on all clothing sales. So initial purchase of inventory should be, the retail store purchases inventory clothing items from suppliers. Suppose they purchase clothes worth $1,000 from a supplier. So what should be the journal entry? What do you think about it? Like, it should be inventory account debit and accounts payable credit. Okay, $1,000 purchase of inventory on credit and inventory purchase on credit. Okay, so it's generate accounts payable. So the retail store increases its inventory asset by debiting the inventory account by 1,000. The accounts payable account is credited by 1,000 to reflect the liability owed to the supplier. Now the second entry, sale of inventory to customer. Like, how we gonna sell it to the customer? What should be the impact? So the retail store sells clothing item to a customer for 1,500. This sale include VAT at a rate of 10%. Okay, so what should be the journal entry? That's account receivable 1650, sale of clothing item to customer. Sales revenue 1,500, revenue from sale of clothing, and VAT payable 150, it's included, collected on sales. Okay, so the retail store debit the accounts receivable account by 1650 to recognize the amount owed by the customer. Sales revenue is credited by 1,500 to recognize the revenue from sale of clothing item. Additionally, VAT payable is credited by 150 to reflect the VAT collected from the customer. You understand this? So now the payment of VAT to tax authorities. So at the end of the reporting period, example monthly or quarterly, the retail store remit the collected VAT to the tax authorities. So what should be the journal entry? So the entry should be like VAT payable, the liability will be decreased by 150. I apologize for this, I just erased the wrong amount here. So it should be here 150, and cash credited, cash or bank, you can say bank, credited by 150. So the VAT payable account is debited by 150 to decrease the VAT liability or to the tax authorities. Simultaneously, the cash account is credited by 150 to reflect the payment made for VAT. So this example demonstrates how VAT is applied in the retailing process from the purchase of inventory to the sale to customer and the remittance of VAT to tax authorities. So the retail store acts as an intermediary, collecting VAT from the customer and passing it on to the government. Okay, and passing it on to the government. I hope you understand this concept, and if you have any questions, you can just send me your questions. And please like, share and subscribe my channel, and also do comments whatever questions you have. Thank you very much.